Welcome. In this video, Zbcn may increase by 100% soon. What is the reason? We will analyze this. Don't forget to subscribe, like, and please watch till the end to understand.
Ascending trend lines play a highly important role in technical analysis and usually provide a strong signal to market participants about the direction of the trend. At the moment, a clearly observable ascending trend line is visible on the chart. This trend line shows that the price has been forming higher lows over time and is following an upward path, indicating that market participants generally have a buying bias. The price's interactions with this ascending trend line actually point to a strong support zone in the market, and these touches often trigger the beginning of a new upward move. That's because investors know this trend line acts as strong support, and whenever the price approaches it, they tend to open long positions. Currently, price action is hovering very close to this ascending trend line, which presents a technically favorable structure, especially if a pullback toward the trend line is followed by strong support and a new upward breakout. It could signal that the uptrend is continuing with renewed strength. In technical analysis, it's common for the price to touch an ascending trend line and bounce upward again, clearly showing that buyers are re-entering the market with strength. This presents a strong signal for investors seeking buying opportunities and offers reassurance to those already in position. Trend lines often reflect investor psychology on the chart. If an asset's price consistently touches this ascending trend line and then bounces upward, it means that market participants view those levels as highly attractive buying zones. In other words, the trend line becomes a shared buy zone recognized by many market players. This means every reaction from this area signals the potential continuation of the uptrend. Especially when these reactions are supported by volume, it becomes highly likely that the price will continue moving in the direction of the trend. At this point, the price is very close to this important ascending trend line and is at a critical threshold from a technical perspective. If the price touches this line once more and then makes a sharp upward move, it could indicate that the trend is being maintained in a healthy way or even continuing with increased strength. In this scenario, investor confidence will grow and buying pressure on the market will intensify. This creates a very favorable environment for both short-term and medium-term investors, as it increases the likelihood of testing or even surpassing previous high levels. One of the most important features of ascending trend lines is that they help push prices higher over time. In other words, these lines can be used to not only understand past price movements, but also to project potential future targets. Therefore, if the price continues to respect this trend line, it should be seen as a strong signal that higher price levels may be reached in the future. The ascending trend we are currently observing is not short-term. It signals a more medium to long-term upward movement. Each pullback is forming higher lows, showing that buyers are willing to enter the market at increasingly higher prices. This clearly indicates that the supply-demand balance favors the buyers. No matter how much supply there is, strong demand drives the price up. And such ascending trends are built precisely on these psychological and structural foundations. If after the most recent touch of this ascending trend line, the price gives an upward reaction, it could mark not only a short-term bounce, but also the beginning of a long-term bullish structure. Because when investors see the price consistently testing this trend line and bouncing upward each time, their confidence in the level increases, and more people will view this area as a buy opportunity. This further accelerates the upward price movement. It's also worth noting that trend lines in technical analysis are not like horizontal support and resistance levels. They are not static. Ascending trend lines are dynamic supports, meaning the support level moves upward over time. This means that each pullback finds support at a higher level and each new peak forms higher than the last. As long as these structures remain intact, market participants adapt to the dynamic setup and shape their positions accordingly. The current technical structure is at a very critical point due to the price's proximity to this ascending trend line. If the price initiates a new upward move from this level, it will create a strong buy signal not only from a chart pattern perspective, but also from a psychological standpoint, because such a move would confirm to investors that the trend is intact and even strengthening. As a result, more investors will enter the market, helping to push the price even higher. Within this ascending trend, a possible trend breakout move may also be observed. That is, the price having found support at the trend line may not only test existing resistance levels, but break them and show potential to move toward much higher targets. These kinds of movements can be particularly striking when accompanied by strong volume support. In short, the clearly visible ascending trend line in technical analysis currently represents a highly important support zone for the market. The price approaching this trend line and receiving strong support from it is a highly favorable development not only for short-term investors, but also for medium and long-term ones. The situation not only protects the technical structure, but also makes it possible to reach new price targets in the direction of the trend. As long as the price respects this ascending trend line, the likelihood of the uptrend continuing remains high. This will give the market positive momentum and attract the attention of more investors. Especially for those developing buying strategies, this structure should be considered a serious opportunity. But we can't make analysis decisions based solely on trends. Let's take a look at the other metrics. Stay tuned.
The descending trend structure observed in the RSI indicator provides highly valuable insights for investors in technical analysis. The RSI Relative Strength Index is one of the most commonly used indicators to measure the strength and momentum of price movements, and it typically ranges between 0 and 100. Interpreting these values is quite effective in determining whether market conditions are overbought or oversold. However, the information this indicator provides is not only limited to the current state, it can also be used to make future projections. Especially trend lines formed on the RSI are just as important as those on the price chart. That's because trend breaks on the RSI often occur before those on the price chart, making them extremely valuable as early signals. In the current technical setup, we can clearly observe a descending trend structure on the RSI indicator. This trend reveals itself through lower highs on each upward reaction and lower lows over time. The RSI moving within such a descending channel typically indicates weak market momentum and that buyers are under pressure. This creates uncertainty among investors and prevents prices from making strong upward moves. However, a break of this descending trend on the RSI generates a highly significant signal in technical analysis. A breakout above the descending trend line on the RSI indicates that buying momentum is gaining strength again, which can signal a potential price increase on the chart. At this point, it's helpful to examine in detail what outcomes may follow a breakout of the descending trend on the RSI. First, a trendline break on the RSI is often accompanied by a breakout of a resistance level on the price chart. In technical analysis, this is called a leading signal. A trendline breakout on the RSI suggests an increased likelihood of a short-term price reversal. Since RSI values tend to move ahead of price, a trend change on the RSI gives investors an opportunity to enter positions early. Currently, with the RSI under the pressure of the descending trend, once it breaks to the upside, it's expected that prices will also start moving upward as buyers regain control of the market. Additionally, a descending trendline break on the RSI often coincides with the formation of a bottom on the price chart or the completion of a pattern. In this context, a trendline break on the RSI boosts investors' confidence and can trigger the entry of new buyers into the market. This is especially significant if the RSI breakout occurs just above or near the 30 level, which is already considered the oversold region. A reversal from this area could carry strong upward potential for prices. Let's also talk about the psychological and structural impacts. The presence of a descending trend on the RSI usually leads to cautious behavior from a psychological standpoint. In an environment where buying pressure is constantly suppressed and rebound attempts are weak, investors tend to feel insecure. However, a trendline breakout on the RSI can be the first sign that alleviates this uncertainty. This breakout typically indicates that buyers are gaining strength, selling pressure is easing, and the market may be entering a recovery phase. As a result, this technical signal can spark a new wave of confidence among market participants, which leads to new buy orders and supports price increases. Moreover, a descending trendline break on the RSI doesn't just result in short-term price increases. It can also initiate larger-scale trend reversals. If the RSI has been in a downward trend for a long time and that structure is broken, it may signal the beginning of a longer-term uptrend. These kinds of setups are also positive signals for medium and long-term investors. After such a breakout, the RSI often consolidates at higher levels, indicating strong momentum in the market. In technical analysis, an RSI breakout becomes even more effective when used in combination with certain strategies. For example, if the breakout occurs at a support level or if a price pattern has been completed, this strengthens the reliability of the signal. Likewise, if volume indicators also show an increase during the breakout, then it becomes more likely that the RSI breakout is pointing to a real reversal. One other point to pay attention to in such scenarios is the sustainability of the breakout on the RSI. It's not just about a temporary move above the trend line, it's also important to see whether the breakout can hold. If the RSI continues to rise after the breakout and starts surpassing previous highs, this confirms that the trend has truly reversed and the downtrend is over. However, if the RSI briefly moves above the trend line and then falls back again, this would be considered a fake breakout, which could mislead investors. That's why it's important to observe how the RSI behaves over several days following the breakout. Furthermore, if the RSI trendline breakout is confirmed across different time frames, the strength of the signal increases. For example, if a breakout occurs on the 1-hour chart and similar breakouts occur on the 4-hour or daily charts, the technical setup becomes much more reliable. Investors can make more informed decisions by using such multi-time frame confirmations.
In conclusion, a descending trend structure and its breakout on the RSI indicator is a highly powerful and meaningful signal in technical analysis. A breakout of the RSI's descending trend line to the upside usually signals a price increase on the chart as well. Such breakouts positively influence market psychology, boost investor confidence, and increase buying appetite. Moreover, this signal can mark the beginning not only of short-term buying opportunities, but also of medium and long-term trend reversals. However, as always, it's crucial to evaluate such signals in conjunction with other technical indicators and support resistance levels for more accurate results. When properly analyzed, structures like a descending RSI trendline breakout offer strong advantages to investors and allow early detection of market opportunities. If RSI breaks this trend, price will start to rise too.
The formation of this small cup pattern indicates that after a certain decline, the price establishes a base and then rises back to the same levels, resulting in a chart pattern resembling a U-shape. This structure is considered a highly positive signal in technical analysis because it suggests that confidence among market participants has been restored, selling pressure has diminished, and buying strength has increased. The most notable aspect of this pattern is that it usually forms with low volatility and then experiences an upward breakout driven by gradually increasing buying interest. This breakout typically begins with a strong move above the cup's high point, and the price generally moves upward by an amount equal to the depth of the cup. One of the key factors that increases the reliability of the cup pattern is volume. During the first half of the pattern, namely the decline, volume generally decreases, and in the base area, volume drops further with horizontal movement. However, in the second half of the pattern, as the price begins to rise again and approaches the high point, a noticeable increase in volume is observed. This increase in volume reflects that market participants are gaining confidence in an upward breakout and that new buyers are entering the market. If the breakout occurs with low volume, the likelihood of a false breakout increases. However, a strong breakout with high volume makes it highly likely that the price will reach a target equal to the depth of the cup. The appearance of small cup patterns on shorter time frames can present significant opportunities for short-term investors. For instance, if this pattern forms on a 15-minute or 1-hour chart, it may represent a buying opportunity for intraday traders. The same logic applies in these short-term patterns. After a base is formed, the price should return to the previous high, then break above that level with strong volume, and finally rise by an amount equal to the depth of the cup. Since the targets in small cup patterns are shorter distances, these trades are generally considered low-risk and quick result opportunities. However, stop-loss levels should be set carefully in such short-term patterns because sudden market movements occur more frequently in shorter time frames. In the success of small cup patterns, it's very important that the investor correctly evaluates whether the pattern is healthy. In some cases, prices may resemble a U-shape, but there may be doubts about whether it's truly a cup pattern. For the cup to resemble an ideal formation, prices should go through a sideways phase after the decline and then reach the previous high again. If the pattern develops too quickly or the price fails to reach the previous high before falling again, the validity of the pattern may be reduced. Therefore, what is labeled as a cup pattern must be balanced, should develop over a sufficient amount of time, and be structurally symmetrical. Once the pattern is completed and a target is calculated, investors typically expect the price to reach this level, which becomes a key part of their strategy. But knowing only the technical target is not enough. Risk management is also important. Placing the stop-loss level just below the base of the cup will protect the investor from potential false breakouts. Furthermore, if the price makes a correction before reaching the target level after the pattern is completed, this should also be considered normal, because every upward trend can include interim corrections. What matters is that these corrections are not deep enough to invalidate the pattern and that the overall market structure remains positive. Another advantage of this pattern is its psychological impact. Since many investors trade based on technical formations, cup patterns often become self-fulfilling structures. That is, when investors see the pattern is complete, they may start buying simultaneously, which helps the price reach the target faster. Especially on social media, among communities, or in groups focused on technical analysis, the sharing of such patterns can collectively increase interest. This makes it easier for the technical target of the pattern to be reached and gives investors psychological confidence. Small cup patterns may sometimes appear during the final stage of a consolidation phase. A price that has been moving sideways for an extended period of time may form a small cup indicating the end of that sideways movement. In this case, the cup may also be seen as a signal that the trend is about to resume. These types of patterns are generally considered more reliable, especially in trends with high potential for upward continuation, because the pattern not only offers a short-term target, but may also represent the beginning of a new upward wave. Therefore, cut patterns are valuable not only in terms of target prices, but also in terms of the continuation of the broader trend. Finally, this small cup pattern can act not only as a reversal pattern, but also as a continuation pattern. That is, there may have been a pause within the existing uptrend, a small correction may have occurred, and now the market may be preparing to resume the trend. In such cases, the rise following the cup pattern may not be limited to the depth of the cup, but may extend much further. Therefore, when the pattern is completed, the price may not only reach the technical target, but also potentially move to new highs. Of course, in this case, the investor should closely monitor the market, consider current developments, and analyze the overall market structure. But the fundamental rule of the pattern remains unchanged. If a small cup has formed, and this pattern is technically complete, the price has the potential to rise by an amount equal to the depth of the pattern. This structure is a reliable, clear, and frequently encountered bullish signal in technical analysis.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.